Welcome back everybody to the second episode of Cryptocurrency for Beginners course. This is the course where I am discussing about cryptocurrency from a very basic level to help you understand it better. With that being said, if you have not yet seen the first episode of this video series, then I would highly suggest you to see the first episode first before continuing with this video. You can see the first episode by clicking on the top right corner of your screen. If you are new here, thanks for stopping by. My name is Nilanjan and I make video here every day to help you make better decisions. So if you like cryptocurrency and like making money in cryptocurrency, then give this video a like so that YouTube algorithm picks it up and shows it to more and more people. And I am sure you don't want to miss all the exciting content that I have planned for you in the upcoming video. For that, you have to subscribe to my channel and hit the notification bell icon so that whenever I upload a new and exciting content, it gets directly sent to your inbox. With that being said, let's start the video. If you are investing in cryptocurrency, the first question that comes into your mind is why cryptocurrencies are so volatile. It is not unusual for a cryptocurrency to go up or down in value by 10 to 20% in a single day. If you are from a traditional market background, like if you are following stock market, gold market or forex market, it is very unusual to see that kind of volatility in a day. In the beginning of May 2021, the premier cryptocurrency Bitcoin was trading at around 64,000 US dollar. By end of May, it came crashing down to below 30,000 US dollar. Within a month, the whole market cap of Bitcoin was cut in half. Why did that happen? If you are investing in cryptocurrency, it's an emotional roller coaster. We will try to find the answer to this question in the next slide. The first reason for this I could think of is the cryptocurrency market is still at an infant stage compared to other markets. Come on, the Bitcoin market is still just 12 years old. Even though it's getting so much media hype and attention, but the market size is still minuscule compared to stock market, gold market, even the foreign exchange market. That means the adoption is also much less compared to those markets. It can only grow with time. You can compare today's cryptocurrency market with internet in 1990s. Remember those days when we used to have dial-up connection and get internet browsing speed in kbps? Think of that now. We are getting so much high-speed internet that we are live streaming 4K videos. Just think about it, how much we have came from that time. This means even a small group of people holding large amount of cryptocurrency, they can influence the market. Even if they sell only their holding, the market moves by a lot. That's why the market is so volatile, because small group of people control the market. Next reason that I could think of about the volatility of crypto market is lack of liquidity compared to other markets. As I mentioned before, crypto market is relatively new. It's just 10-12 years old compared to other markets like stock market, forex market. Lot more people are playing around in those markets, which is not currently present in crypto market because it's such a new market. If you don't know what liquidity is, allow me to explain. Liquidity is basically refers to how easy or quick a security or stock can be bought or sold in the secondary market. For example, if you have a house and you want to sell it, it's very illiquid. You cannot sell the house the next minute if you want to. But if you have, let's say, 100 stocks of Apple, you can sell it immediately in the market because the Apple stock is highly liquid. A lot of people are waiting there trying to buy or sell the stock. That's why Apple stock is a liquid stock. But your house, which takes maybe weeks or months to buy or sell, that is not a liquid asset. Similarly, crypto market, as I mentioned, is relatively new and lot less people are trading or buying or selling cryptocurrency compared to stock or forex market. That's why the liquidity is lot less. Just compare the size of crypto market compared to other markets. The global stock market size as of 2019 is around $70 trillion, 70 trillion US dollars. Compare that to stock cryptocurrency market cap as of the time of recording is barely $2 trillion. So just see the numbers. Where is 70 trillion and where is 2 trillion? It's 35 times bigger than what crypto market is. So lack of liquidity is another reason for the extreme volatility in the crypto market. Another reason for extreme volatility in cryptocurrency market, what I can think of, is the lack of regulation of the crypto market. As you know, the global stock market is regulated in each country. Like here in United States, it's regulated by Securities and Exchange Commission, that is SEC, and back in India it's regulated by SEBI. So if some individual or a group of people wants to do something wrong in this market, these agencies, these government agencies will immediately catch them and try to stop them to do something wrong, so that the regular investors like you and me doesn't get impacted. But with cryptocurrency market, since this is not regulated, people with big pocket, they can do anything they want here. That's why you see so many coins goes up and down in value in 3, 4, 500% in a single day, and then comes crashing down next day, taking money from regular investors like you and me. Well, they pocket their huge gains. All this because no one is watching or looking over their shoulder like SEC or SEBI. So this is one of the most important reason why the cryptocurrency market is so volatile. One of the biggest drivers of volatility of cryptocurrency is obviously speculation. Speculative traders buy or sell cryptocurrency in huge quantity with the expectation that it will go up or down in value by a huge margin within a short span of time, so that they can make money off it. They don't understand the fundamental of that particular crypto before investing. They just want to make money. They don't even know is there any particular real life application of that cryptocurrency or not. Since the cryptocurrency market is relatively unregulated, a lot of exchanges offer high leverage trading. If you don't know what leverage trading is, let me know in the comment section below and I will explain it in a separate video altogether. It's a topic in itself to be discussed in details. But if I have to explain you in very short what leverage trading is, it allows you to borrow money from the exchange to place your trade. If you don't have enough money, let's say you have $100 and a cryptocurrency is trading at $100, so you can buy only one quantity of that cryptocurrency, but certain exchange allow you to borrow up to 100x. So what happens is that it will allow you to buy up to $10,000, so you can buy 100 quantities of that particular coin. So your reward potential is getting 100 times bigger. Also your risk potential is also 100 times more. You can get liquidated just by a movement of 1% of that crypto, and that is very usual in case of cryptocurrency because of this high volatility. So this speculation, I think, is one of the most important reason why crypto market is so volatile. Now that you know what are some of the reason for volatility in the cryptocurrency market, let's get to the next point, that is this volatility good or bad? Let's check it out. So is the Bitcoin or cryptocurrency volatility is good or bad? I would say that depends on who you ask. If you ask a cryptocurrency trader who is doing leverage trading every day, it's not good for them. They can get wrecked with the extreme volatility. But if you are asking an investor who has invested in Bitcoin for, like, say, with the horizon of 5, 10, 20 years, it's not an issue at all. If you see the chart of Bitcoin like you are seeing here for the last 12 years, it only increased. Obviously there is some minor ups and downs in the 12 years journey, but if you see the overall trend, it's always increased. Like the famous investor Bill Miller says, with Bitcoin, volatility is the price you pay for performance. And I think it's like digital gold. It is just a much better version of gold as a store of value, and I seem to agree with that. If you have $100 million and you buy gold with it, and you'd like to transfer it from New York to London, it's a logistical nightmare. You will have to pay millions of dollars just to take that gold just to transport that gold in an aeroplane from New York to London. But with Bitcoin, you can just do it in a second through Lightning Network. Think about it. How cool is that? So volatility is the price you pay for this great performance of this asset that we are getting for last 12 years, and it is only going to get better and better with time as more adoption comes around. Now the cryptocurrency market is just $2 trillion. Think about when all the institutional money is coming and the market gets much bigger, like gold market cap is $10 trillion. When the market cap of Bitcoin or cryptocurrency reaches 10 trillion, it will be much less volatile, because those institutions, they are not going to buy or sell or do leverage trading with their Bitcoin. They are going to just keep it as a store of value, hedge against the inflation. As long as the Feds or the central bank keeps on printing money like they are doing, Bitcoin or these cryptocurrencies will go up in value, because the supply of Bitcoin is finite at 21 million. There is no way anyone can print more Bitcoin if they wish to. There's no control over it. It's the most sound money that humankind has ever seen. Now that you understand why cryptocurrency market is so volatile and how you can use it in your own advantage, let's see what are some of the ways you can buy cryptocurrency or get exposure to cryptocurrency. The first way you can get exposure to cryptocurrency is using a cryptocurrency exchange. Next is invest in companies which invest or related to cryptocurrencies or Bitcoin. So if you want to invest through a cryptocurrency exchange, first you have to choose a cryptocurrency exchange, then create an account in that exchange and get verified if it is needed, or if most of the exchanges nowadays need KYC verification. So if the cryptocurrency exchange need that, you have to provide it and get verified, then deposit dollars or euros or INR into that cryptocurrency exchange, then place a buy order with that dollar and buy your desired cryptocurrency with that fiat currency. So you got the cryptocurrency in your wallet. All these cryptocurrencies are stored in wallets basically. Like you have wallet where you store your money, keep your money. These cryptocurrencies, digital currencies, are also stored in virtual wallet. So if you can decide to keep your cryptocurrency in exchange itself. Since the exchange is always interacting with the internet, it's very much possible that it can get hacked. Since it is always connected to internet, it's called hot wallet. It's another way of storing your cryptocurrency wallet, is to send it to a device or keep the private key of your cryptocurrency in a separate place, which is not connected to internet. That is called cold wallet, which is much more secure than keeping your cryptocurrencies in hot wallet. If you want to hodl or hold your cryptocurrency for longer duration, it is always suggested to keep your cryptocurrency backed up in a cold wallet, so that there is no chances of it getting hacked and you lose all your cryptocurrency. So these are the two things where you can store your cryptocurrencies. Leave the cryptocurrency on the exchange, or keep it in hot wallet, or keep it in cold wallet. Now, next way you can get exposure to cryptocurrency is invest in companies which is connected to cryptocurrencies. For example, MicroStrategy has around 100,000 Bitcoin. It's one of the biggest publicly traded company here in United States that has the highest amount of Bitcoin in its balance sheet. So as the price of Bitcoin moves, the share price of MicroStrategy also moves. So this is a passive way of getting exposure to Bitcoin. Another way of investing or getting exposure to cryptocurrency is buying stocks of the mining companies. Like there are companies like Riot Blockchain, Marathon Blockchain. So these companies do mining of cryptocurrencies. They are heavily related or correlated with the price of Bitcoin. So you can get exposure by investing in companies as well. There are other companies like PayPal, Square also invested in cryptocurrencies. So if you buy their stock as well, you get some exposure to cryptocurrency. So these are the two ways that you can get exposure to cryptocurrencies. Like I mentioned in the previous slide, you need a cryptocurrency wallet to store your cryptocurrency. Like in physical world, you store your money in your wallet, right? Similar way, in digital world, to store your cryptocurrency, you need a digital cryptocurrency wallet. A cryptocurrency wallet is basically a combination of public key and private key. Public key is used to receive coins from other parties. People can send coin to your address, which is generated by your public key. Let's say person A wants to send you 10 Bitcoin. How do they send it? You share your public key with that person, and they will send the 10 Bitcoin to your public key address, and then you will receive it. Similar way, private key is used to send coins to other parties. Let's say you want to send 10 Bitcoin to person A, then you would need your private key to send particular 10 Bitcoin to that other person. Public key, as the name suggests, is public and easily viewable. It's nothing secret. It's easily viewable in the blockchain. It holds all the record of who is sending and who is receiving from which public key to which public key. But private key is something secured. You never share your private key with anyone. If someone gets access to your private key by any chance, they can wipe out all your crypto fund in a minute. So keep it in mind. Never share your private key with anybody. This is some of the key difference between stock market and cryptocurrency market. As you know, cryptocurrency never sleeps. It's running 24/7, 365 days a year. On the contrary, stock market generally opens at 9 in the morning and runs till 4 in the afternoon. And also stock market is closed on Saturdays and Sundays, whereas cryptocurrency market is always open. So that is one of the key difference between stock market and cryptocurrency market. One more thing is cryptocurrency is global. Bitcoin, for example, is not specific to a particular country like for United States or China. You can buy Bitcoin from any part of the world. Even if you are sitting in a remote village in Africa and you want to buy Bitcoin, you can do that easily. Compared to that, with stock market, it is generally localized to a particular country. Let's say you want to buy stock of Amazon, you need to buy it, you need to be a United States resident and buy it in this particular exchange that is operating in United States in this particular time. If you are sitting in some other place and you are not a resident of that particular country, you cannot get exposure to that stock where it is trading. So these are some of the key difference between cryptocurrency markets and stock markets. To summarize, we first went through why the cryptocurrency market is so volatile. The reason being is infant market, then it has low liquidity, then it's unregulated market. The fourth reason I discussed was it's highly speculative market. So these are the four reasons that the cryptocurrency market is so volatile. Next, we went through how you can use volatility for your own advantage and get the best return out of it. So that is what it is. Next, we went through how you can buy or get exposure to cryptocurrency through different exchange or buying stock which has exposure to cryptocurrency. Next, we discussed about how you can store cryptocurrency either in hot wallet, cold wallet, or in exchange. I also explained to you what is public key and private key. Then at the end, we went through some of the key difference between stock market and cryptocurrency market. So with that being said, I hope you like this content and want to support me. Then do like this video so that YouTube shows this video to more and more people and help me to educate more people about this upcoming new technology. Let me know in the comment section below if you have any particular question and you want me to cover in the next subsequent episode of this video. If you like this content and learning something new from this episode or series of cryptocurrency videos, don't forget to subscribe to my channel. Share this video with your friends and family who might want to invest in cryptocurrency. Till next time, keep learning. Thank you.